Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to new topic. Today topic is about the financial reporting and management reporting system. If we can recall that in the beginning we talk about the structure of this subject or accounting information system, we talk about that there is a systems called the TBS, transaction processing system, and there is subsystem under this transaction processing systems, which is revenue cycle system, the purchasing or expenditure revenue cycle, and we have the conversion cycle system. And then the output of those systems will be the input for the reporting systems, which is either to be financial reporting system or management reporting system. And we discuss and distinguish between the two systems. Financial reporting systems mainly for external users. It's not discretionary basis. It's based on the standardized the reporting financial reporting system or financial reporting framework, whereby the management reporting system is discretionary or optional in terms of the formatting, in terms of the content, in terms of the timing, and so on. So today topic is mainly about the reporting system. Okay, so this is the learning objectives. For today, we will talk about the general ledger systems. We will talk about financial reporting systems, and we will talk about management reporting systems. Okay, then we will talk about the control, and governance of general ledger system and also financial reporting system. We will talk about the factor that influence the design of management reporting system. Also, we'll talk about XBRL. So all of that will be covered and some more we will discuss in detail. Okay? So we start with general ledger and reporting system processing. The main activities is first updating general ledger, posting to the adjusting entries, prepare financial statement, produce managerial reports. And please take notes that updating the general ledger, it is happened in the previous cycles in the TBS system, or we can call the transaction processing system. Within the transaction processing systems, you can see, if you can recall, when we draw the DFD or the flowchart system, we have the last point or the last column is describing the updating of the journal vouchers and the general ledger. So that this one is happen this activity is happen within the cycle activities or departmental activities. But for the posting, post adjusting entries, preparing financial statement, and produce managerial report is happening on the general ledger and reporting system process. Okay, so the key objectives of the general ledger and reporting system process is to record information accurately as it is aggregates to manage to the management and prepare the financial reports which are used in decision making. So the ultimate objectives of the reporting systems is to used in the decision making process. So this diagram is explaining how the general ledger system connected by the other subsystems. So for examples, the general ledger system is connected by the revenue cycles, by the billing system, and the sales processing, and as well as the cash flow. So all of this under the sales or revenue system is updating the general ledger system. Similarly, in the account payable, cash disbursement, payroll, cost accounting, and inventory controls, all of it is related either to the purchasing or the conversion cycle. So all of these subsystems are updating the general ledger system during the processing of the transaction within the cycle system itself. Then when we do the adjustment, also we will have the 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 financial reporting system also will update the general ledger as well for closing entries, and then it will goes to update or to generate the reporting system. First, either reporting financial reporting system will be which will be in for the external users, or for the internal users here under the management reporting system. We'll discuss in a while for each one of them. So the general vouchers is the source of input to the general ledger, with the managers offering a degree of control against the unauthorized general ledger entries. In other words, the journal vouchers is the one of the control point to control the updating the general ledger entries. This diagram is showing us that this is an example of general vouchers. So we see here the general voucher is updated or authorized by someone, approved by and posted by. So this is a kind of very simple transaction, and we can see here we have a number of the journal vouchers and date, as well as the account number and so on. So it's kind of a very controlled source of the updating the general ledger. So we can see this is the mediation source of document to update the general ledger. Okay, so general ledger system database, or the general ledger master file, is the principal file in the general ledger system database and is based on the chart of accounts. So in the financial reporting system, the financial reporting systems draws upon the general ledger masters to produce financial statement. In other words, the output or the updated master file of general ledger is the file or the input for the financial statement reporting. Okay, so we can see here the record layout for the general ledger master file. We have the account report, we have the description, account description, we have also the classes, accounting classes, normal balances, either debt or credit, then the beginning balance, total debt, total credit this period, and then the current balance. The current balance, for sure, it will be, it goes to the financial statement. Okay, so this diagram is explaining in details the general ledger and reporting system process. It's DFD, but in more details. So we can see here in the first process, or the first activity, is the updating the general ledger. Updating the general ledger, it comes from the subsystem of accounting subsystems, either revenue cycle, uh, purchase and expenditure cycle, payroll or purchasing cycle, and then we have the conversion cycle. So all of it will, the journal entries will be updated to the journal ledger, and as well as the treasurer will update the cash movement in and out to the also updating to the general ledger. So this process will update two main files. One is the general ledger, journal vouchers, sorry, the journal vouchers, and the other file is the journal ledger, GL. Okay, and then this general ledger will be update the trial balance to the posting and adjusting entries. And if you notice here, we have two ways. First, updating with the balances before the with the trial balance before adjustment, and then after the adjustment it will update again the general ledger with the adjustment of, we can call it the adjustment, the trial balance after the adjustment. Okay, then after that, the also this adjustment adjusting entries will update the journal vouchers, will also will update the adjusted trial balance to the preparing financial statement. So in this number three, the third process is preparing financial statement. And when preparing the financial statement, will update the general ledger with the closing entries, and then produce the financial statement to the external users as well as to the managers, the internal users. So this is the number one. This is the system of the system of reporting system, financial reporting system. How about the managerial reporting or the management reporting system? It will be in the process number 4, producing management reporting system. It will be two ways of update. General ledger will update the will be used, the information in the or the balances in the general ledger will be updated to the process of producing managerial reports. And also the budgeting direction or the direct budget direct will also be one of the input for produce managerial report. Then it will sent to the managers as demand report according to the need of the management. Let's describe some files under the General Ledger System database. First, General Ledger History file has the same format as the General Ledger Master. It provides historical financial data for comparative reports. Journal Vouchers file provide record of all general ledger transaction and replaces the traditional general journal. Okay, and then also general vouchers history file contains the general vouchers of both the journal vouchers of past period of the audit trial. The responsibility center file contains financial data by responsibility center of the management reporting system reporting. The budget master file contains budget data by responsibility centers. So if you notice, those two files is mainly used for the management reporting system, the budgeting as well as the responsibility centers, and for sure also the management reporting system will use also the general ledger file. Let's see the financial reporting procedures. The financial reporting procedures start by capturing the transaction. For sure, capturing the transaction will be located within the departments or within the accounting cycle, the transaction processing cycle, TBS. Recording in special journal and post to the subsidiary ledger. This one also still located in the TBS, and then post to general ledger periodically. And we can see from here it will be within the reporting system, financial reporting system. And then prepare the adjusting trial balance, making generalize and post adjusting entries prepare the adjusting trial balance, and then prepare the financial statement, journalize and post closing entries. Lastly is preparing the post closing trial balance. Now let's see those procedures. We see it in the diagram, either the DFD or the other. Here we have the financial reporting procedures system flowchart explaining the basic technology system for the financial reporting process. So if you notice here, the departments or the explaining the location of the transaction or the process start by TPS, transaction processing system, and it is in a daily base. So we can see here is starting from capturing the economic event and recording the transaction in the temporary transaction file, and then after that we process it, we post the process and update the journal's ledger or the subsidiary ledger, and then we prepare the journal vouchers. After we prepare the journal vouchers for this transaction, we update the journal vouchers file, and then this journal vouchers file, if you recall what we say just now, we say that the journal vouchers is the source file for updating the general ledger here. Okay, so we do the from the journal voucher, we update or we post to the general ledger, and for sure we will have to file uh, hard copy, because we said here is a basic technology system, so we will file the journal copy of journal file, and then after we update the general ledger, we will send the update to the account balance for the worksheet. Okay, so this is the process number 5, and then we print out the worksheet and do manual prepare of trial balance. If we talk about advanced system, this one all will be in an automated process in real time. We will talk about it in a short while, I think. And then we print out the trial balance. If you see here, we analyze the account balances and prepare the adjusting entries and adjusting trial balance. So this one will be also will goes again to update, first to print out the general vouchers of the adjusting entries, and then update the again the general ledger. Actually, if you draw, you can also just do like this. It's also correct because using the same file. And I do prefer, instead of just putting journal vouchers, just say journal vouchers of the adjusting balances. Okay, then after that we also will print out the again, and not necessary print, but if we have it in a hard copy, then we need to file it again here, and then we print out the adjusting trial balance documents, and it will process manually preparing the financial statement here, and then we print out the financial statement and then send to the stakeholder. Then for sure we need to prepare the closing entries and post to the journal, and post it again to the journal. This one after or after we prepare the financial statement, the closing entries. So we need to prepare and key in to the process in a journal vouchers, and again updating the journal ledger, general ledger, sorry. And then this one also will goes to to prepare post closing trial balance and post and also post closing trial balance. Okay, so we can see here the location. Here you can see here the second one. The process is all in general ledger, periodically or hourly base. But if you notice, when we talk about updating the and generating or preparing the financial statement, it is in the end of the period. Not necessarily it is in the yearly base, but for the it is based on the need, because the listed companies, they are required to generate quarterly financial statement. Let us say here the real-time general ledger. What we mean by real-time general ledger, meaning that we update the general ledger in the real time of the transaction. When the transaction occurred in the TBS, the application or the software will update the general ledger directly, and all it will concurrently update and create general vouchers for each post. So let's see how it works. Okay, but before that, we should understand that uh, we have four departments involved. Uh, Departments, whatever is it, either sales department in updating the sales system, or purchasing system in the purchase and procurement, and payroll for the human resource and personal department, and other system for production and cost accounting, as and so on. And then we have data processing department. Data processing department is, we can call it the IT departments. And then we have financial reporting groups, or either one person or departments. And then we have general ledger departments here. Okay, so we see here that the system, uh, those system cells, purchase, payroll systems, and other systems will integrated transaction processing system, yeah, digitally updated, and update the general ledger and journal vouchers in the concurrent manner. And then we will update update the general ledger and financial reporting system. And it's also the output of this process will goes also for the to the general ledger department for review, um, and as well as to the for preparing financials statement and adjusting trial balance, and also the closing trial balance post, the closing entries after or post of trial balance. Okay, so just now we talk about real-time updating and processing of the financial statement. Now let's talk about advanced system in updating or in reporting the financial statement to the external users. So XBRL is one of the advanced system, or flexible advanced system in reporting, and it provide a flexible data to be processed and analyzed compared to the previous uh, or the traditional reporting, either uh, in term of PDF or in term of printing and so on. So now it is more flexible. We will explain in what manner it's flexible. Okay, so XBRL is a short form for Extensible Business Reporting Language. And this extendable business reporting language is based on re-engineering the financial reporting. It generate instead of generating what we call generating static information in the static financial reporting. It allows the companies to generate a flexible, usable. You can use the figures and create formula, analyze in a easy way. Okay, so To talk about the XBRL, we should talk about explain the platform, the technological platform of the XBRL, which is the XML. XML is a meta language for describing markable languages. Markable languages mean changeable. We can change this language that allow us to change the information in the file. I will explain and give you some examples about that in a short while. So XML extensible means that any markable language can be created using the XML. So XBRL is created based on XML. Okay, includes the creation of markable language capable of storing data in relational form, where tags or formatting comments are mapped to the data values, and it can be used to model the data structure of an organization internal database. Um, Let me explain the difference between XML and HTML. HTML is a data where it enables the users of the computer or the website to view only, not to do any changes on the format. So sometimes if you see, you can view sometimes some information in the website, but you cannot adjust. You can do copy and paste and so on, but you cannot key in or do formula on it. But for, let's say, XML, no, it enable users computer can recognize the XML and process the accordingly, relieving some of the burden currently placed on web servers. In other words, it allow you to modify, not necessarily modify, to use the data and restructure it in a different way. The XML based language for standardizing methods for preparing, publishing, and exchanging financial information. The first step is to select an XBRL taxonomy. What is taxonomy? Is kind of list of dictionary of the terms used within the XBRL. Okay, so we will explain in a short while what is taxonomy and so on. It help the taxonomy, XBRL taxonomy, help to classify the schemes that specify the data to be included in the exchange or report. Next step is to cross-reference each general ledger account to an appropriate XBRL taxonomy elements or tags. Mapping the organization's internal data to XBRL taxonomy elements. And then tags are used whenever data is disseminated to outsiders. The computer programs that recognize and interpret tags general XBRL, we can call it XBRL instance documents, the financial reports that can be published and made available to users. This figure is explaining the overview of XBRL reporting process. So you can see the first process is to create a taxonomy mapper. A taxonomy mapper bring the input of taxonomy mapper comes from creating XBRL taxonomy and as well as the reporting organization's financial database. So both will update the taxonomy paper. Then after that, we'll create a reporting organization's financial database with embedded tags. Instead of having a normal report here, we will have the reporting organization financial database with the embedded tag of the XBRL taxonomy. Then we create the XBRL instance documents, which is the final financial reports that will be used and upload to the website here, reporting the organization's website. So we upload the instant documents to the website, and then this is all of this is in the side of the information reporting organization, meaning that the generator of the report, financial report, whereby for the information users organization, the organization, me and you, or the financial analyst, the auditors, the tax agent, any organization that will use that information, we first will download the financial reporting to users to the user system, and then analyze the financial information. Instead of copy paste, they can use the because they are using will be using the standardized taxonomy map. Okay, so this is to explain the internal corporate database. Here is the database. We have here the accounts, full accounts, trial balance data, amount, and we have the account description. This is what we call the internal corporate database without text. But when the company use the general ledger to taxonomy mapper, and then we need to create a mapper. So if you notice here, we have the map XBRL taxonomy system created a mapping or definition for each element. Here we have, let's say, cash in bank Canada. So it has its description. It is under current assets, cash or cash equivalents, and short-term investment. Okay, so and then the company general ledger account. Here the number of the account. Okay, so here we have database structure with the XBRL tag. So if you notice here, what is the different is the taxonomy, this one. So in other words, we create a taxonomy, we create the database, the financial database, according to the taxonomy. We attach, we map all of the accounts, the financial information and data with the taxonomy generated or standardized taxonomy of the financial reporting systems, and normally it's generated by the government bodies if they are enforcing using the XBRL system, or by the stock market exchange or the to generate a standardized report. So here is the XBRL instance documents. You can see here it's kind of coding, but this is what this is the data that generated or uploaded to the system. Instead of having pictures or PDF file, no, they need to update in this format, update the file or their information according to this format. If you notice here, we have the account number here, we have the current assets, some information. It's kind of codifying the financial system or the financial database in order for the other users of this information to use it in a flexible manner. Okay, so what is the current state of XBRL? Now we understand what is XBRL and so on just now. So now we need to understand what is the current global and local status of the XBRL method or language of report. So first, it likely to be the primary vehicle for the delivering business report to the investors and regulators in the near futures. So it means that in the near futures, the most of the companies will be required generate their financial report in XBRL language. Development of XBRL reporting. You can see here the in US in December 2015, the stock market in US requires the large publicly held companies to adopt SBRL, um, uh, and this is in 2015, and also in Tokyo, Canada, China, Spain, Netherlands, and UK. So all of these countries are enforcing the large companies or the listed companies to use the XBRL. Use XBRL facilitated the fulfillment of legal requirement specified in Sarbanes-Oxley. So let's have an update in the XBRL in Malaysia. The story of XBRL in Malaysia starts from the SSM adoption of the XBRL for annual and financial filing of more than 1 million companies in 2018, I think. Uh, Throughout the introducing of the Malaysian Business Reporting System, MBRS. The MPRS refers to the submission platform based on the extensible business reporting language, as we explained just now, XBRL format. MPRS allows the submission of first the annual returns, financial statement and reports, and as well as the exemption application related to either the financial statements or the annual returns. So the component of MPRS is SSM taxonomy, and as we explained, the taxonomy under the XBRL is the dictionary of financial and non-financial reporting elements of the three submission criteria, either the annual return, financial statement, or the exemption application embedded in the MPRS preparation tool called MTool. And then we have MPRS. MPRS preparation tool, uh, a preparation tool that allows companies to prepare and generate annual returns, financial statement, and the exemption application in the XBRL format. And then lastly is the portal, mPortal, a submission platform to load the XBRL files for the annual return, financial statements, and the exemption applications. Okay, so that is the components or the update, and the latest update I found up to today is the only what I get in 2018 update. So maybe due to the COVID-19 and those busy life and busy pandemic, maybe there is no much update on that. Here we will talk about risk and controlling the general ledger and financial reporting system, and we will categorize the explanation after a while based on the activities that we mentioned in the early in this class. So we'll talk about the risk and controlling under the updating the general ledger. We'll talk about risk and controlling under the posting and adjusting the entries. We'll talk about risk and controlling under the preparing financial statements, reports, and the managerial reporting system. We will have it in details, and then we will explain it later on based on the Costco systems, based on the activities that we know, the first segregation of duties, the independent verification, documentation, and so on. After that, we will talk about the IT application. IT application we will talk about some controls there, and we will explain also controls under the XBRL system or platform. So the first activity is updating general ledger. We have two risks under this activity. Is first, inaccurate update of general ledger. How to control it? We have three types of controls. First, data entries processing integrity controls. Second, reconciling the accounts from subsidiary journals to general ledger and the accounts, example, the account payable. And then we have the audit trail. Then for the second risk is unauthorized journals entries, controlling also we can control it in three functions or three activities. First, access control, reconciling and controlling report and audit trail. The second activity is posting adjusting entries. But before we talk about risk and controls under this activity, let's first refresh our information on the posting and adjusting the entries. So first we have accruals, we have deferrals, we have estimates, re-evaluation and correction. So those activities also under the posting and adjusting entries. So accruals, for your information, or just recall, I believe everyone here is understanding what is this, what is accrual. Accrual is made at the end of the accounting period to reflect events that have occurred but are not in the financial statement. So example, wages payable or salary payable, which is we need to pay. It is a kind of liability that even it's expenses, but it's payable. GUFRS is the opposite, either either expense or revenue, made at the accounting period to reflect exchange of cash period to the performance of related events, example of rent. Okay, so estimates is a portion of expenses expected to occur over the number of accounting period, like depreciation and accumulation of depreciation and so on. Re-evaluation, the entries made to reflect differences between actual and recorded value of the assets, or changes on the accounting principles. Correction entries made to counteract the effects of errors found in the general ledger. So all of these activities are made under the activity of posting adjusting entries. For your information, if we use the software, accounting software nowadays is, I can guarantee 99% of the companies are using accounting software, even small companies, due to the cost effect, because it's not that expensive and it save time and reduce the effort for the, and also help in compliance and sustainable of the organization. So the correction somehow will not be much there. So let's say what is the risk. The risk is first inaccurate adjusting entries and also unauthorized adjusting entries. So how to control? So first, data entry processing integrity control, as same like the updating the general ledger. Spreadsheet errors protection control, standard adjusting entries. For unauthorized adjusting entries, we have access control, reconciling and controlling reports, and also the audit trail creation and review. For the preparing financial statement and producing managerial reporting activities, both are having the same, because both are about preparing the reports, either preparing financial statement for external users, or producing managerial reports for internal or management users. So incorrect financial statements. The controls here is to process integrity controls, use packaged software for preparing financial statement and deduct any inaccurate financial statement figures, and then training the staff who's using that software, and also apply the internal internal or external audit. An external audit. And then we have the fraudulent financial reporting. For this, we need to have auditors, independent auditors, external and auditors based on the requirement and compliance of the company. Whether it's a listed company, then they need to have internal and external. But if it is a private company, they need to have at least external auditor. For the third risk here is poorly designed report and graphs, and this one I believe it's related to more to the managerial reports. So how to control it is responsible is by adopting responsibility accounting, balance scorecard, or training, and also training on preparing graph design. And on this, there is a new application introduced by Microsoft is called Power BI. It helped to uh, produce graphical information, either the financial information in a very meaningful and understandable way. Just now we explained in based on the activities. Let's have another representation of the risk and controlling based on either first we will illustrate the risk in general for financial reporting system, and then we will talk about the physical and the IT controls based on the type of control activities. So we have the potential risk and threats to the financial reporting systems includes the defective audit trials and authorized general ledger access, general ledger account that are out of balance with the subsidiary accounts, meaning it's not tally the general ledger accounts and balances not tally with the subsidiary accounts on the department or in the TBS system. And then lastly is inaccurate general ledger account balance due to unauthorized or incorrect journal vouchers. So we have 6 categories of physical controls under the COSCO framework. The first one is transaction authorization. Journal vouchers must be authorized by manager at the source department, and we have explained and illustrate one figure showing that there is a need for approval of journal vouchers documents. And then segregation of duties. So the general ledger clerk shouldn't hold any duties of recording and keeping the record. Responsibility for special journals or the subsidiary ledgers also shouldn't hold any responsibility to prepare journal vouchers or having custody of physical assets. Three, the third activity controls physical activity is to access control. Unauthorized general ledger, general ledger access can cause errors, fraud, and misrepresentation in financial statements. And this is supported by Sarbanes-Oxley requirements, which require controls that limit the database access. Number 4 is accounting records by having audit trails, ensuring the transaction can be accurately traced from the initial to the final destiny. Files should be detailed enough to answer the inquiries, reconstruct data if destroyed, and provide historical data, meet the government requirements, and lastly, prevent, detect, and correct errors from occurring. Number 5, independent verification. General ledger, the departments provide these steps within the accounting information systems, and these 2 steps is preparing the journal vouchers listing, which provides relevant details of each journal vouchers posted to the general ledger accounts or files. And also general ledger change reports present the effect of general vouchers posting in general ledger. We will have the second slide. We will have figures explaining how those two files or functions can help in as can play a role as an independent verification. And here we have general voucher listing. You can see here we have the list of general vouchers, tracing the general vouchers here, and we have the description, we have the account numbers, and we have the credit or and debts, the debts and credit balances. So by here we can have what we call independent verification for the transactions posted to the general. We have here another report which can be used as independent verification in the process. So we can see here the general ledger change report describing the balances move and the net of changes, the balances also, and it bring the references, the journal vouchers references, the number of the references, which will give clear how to show clear control. We can trace and verify the transaction posted to the journal to the general ledger according to this report. Just now we explained the physical controls based on the Casco. Now let's see or have a look to the IT application controls for the general ledger and financial reporting system. For the IT applications controls, we did mention it several times that it categorized into three main groups. First is based on the input application controls and the processing application controls, as well as for the output application controls. So in input controls, we try to ensure that whatever key into the system or update to the system, here we talk about general ledger and financial reporting system, is accurate and authorized. So it will process certain IT applications control in order to ensure the accuracy of the input. And from that we have edit and check techniques, check the digit to ensure the error-free data in input into the general ledger and financial reporting system, especially in the general ledger as the first step to for the system for updating. And we know that there is a, when we talk about the journal vouchers, that it is the main source for updating general ledger. And we can if you can recall in the beginning of this lecture, we give an example of the GV or the journal voucher, and there is a approval process for that. So it's just to ensure the accuracy and the authorization of updating the general ledger. And also for the processing and output controls to serve the same objectives of free data processed in the general ledger. In terms of processing, if you recall, we have some batching process, we have some using the logical or the log file within the system to record and do play the role of what we call the trial balance, the trial audit trail. Sorry. Okay, so and then by implementing more real-time transactions processing will avoid the human reconciliation and review, which provides the benefit and also may create some risk, but the benefit is more, I believe. By eliminating the human element, this would reduce the possibility of some errors and increase the efficiency of the processing process in the general ledger and financial reporting system. The risk of applicable logical errors that could have widespread and disrupting the implication of for the financial reporting systems So we need to apply some IT application in terms of the processing, in the processing level, to ensure the controlling the logical. Okay, so now we will move to talk about the internal controls implication of the XBRL. Since we talk about XBRL as the process of output, it's kind of the processing the communication and exchange of the financial information. So we need to also to have a look into the controls application or the IT applications that should take place in when we implement XBRL platform. We can map our discussion of internal control implication of XBRL based on the three main stages of the XBRL process. First is in the taxonomy creation. When we create the XBRL taxonomy, uh, if there is incorrect generation result in incorrect mapping between data and the elements we mean the accounts, that could result in material misrepresentation of financial data. The second stage or the second activity in XBRL is the taxonomy mapping errors. So correctly generated XBRL tags may be incorrectly assigned to internal database accounts. So let's assume we have created taxonomy correctly, but we do mistake in map those taxonomies and tags into the right internal database of accounts. That will results in material misrepresentation of financial data. Then the last point is about validation of instance documents, meaning that validation of the output. If we have mistakes or risk in producing or display the financial information in the web server. So independent, how to control it? We should have independent verification procedures should take place to ensure the appropriate taxonomy and tags have been applied before posting to the web server. Besides that, there is a risk related to issuing a new standards or any amendment of the existing accounting standards that may affect the financial reporting process. Also, the technology, the new technology comes like artificial intelligence that we have now, and now we are talking about blockchain technology as new tools to generate and to assess the accounting process. So new standards and technology will have an implication on the accounting information systems. Understanding the systems and implications due to the fact that IFRS is different from GAAP. We need to understand that because IFRS is mainly for the financial reporting system, process. So IFRS is the international framework of reporting standards, whereby GAAP is a very general acceptable accounting principles. So it doesn't mean that if we follow the GAAP, it's also is follow the IFRS. IFRS is more specified and concerned on how to standardize the financial reporting information. One of the major difference is how fixed assets are recorded and reported. So IFRS requires that the fixed assets be reported in component basis. meaning that different element of a fixed assets may have different lives. Okay, so it's based on the life cycle of the fixed assets. So we need to how to say break down the fixed assets reporting based on based on the life cycle for each component of it. For example, a delivery track may have the component of the engine and the chassis, and these components may have different useful life values. Organizations need to understand these differences and determine how best to transition their accounting information system to the new standard. Same things goes to the furniture. We should have different life cycle. We have like in the building we have sofa, we have a few things that is the life cycle is longer compared to the aircon or other electronical stuff inside the building. Okay, so we need to break down all of it. Here, let me give you an recent update in 28th October 2020. The IFRS taxonomy have an oral update. So the board heard the feedback and discussed next steps on the proposed update to the IFRS taxonomy to reflect the interest rate benchmark reform, recognition and measurement of the financial instruments, also do some amendment in insurance contract, and also have some amendment in the PPA, the property, plant and equipment. The conclusion here is there is a update in the IFRS, and this is considered one of the risk that affect the process or the general ledger and financial reporting, mainly the financial reporting system. So we need to ensure that the financial reporting systems is updating and uploading those new information into the system, those standards. Before I discuss the management reporting system, which is the second half of the today lecture, let me recap the main point about the financial reporting system. In the financial reporting systems is compulsory reporting system, and it should follow the standards which regulated in from different bodies like IFRS, MFRS, and MIA in Malaysia, and as well as the Security Exchange or Bursa Malaysia in for the Malaysian listed companies. So all of this are regulating how the company is supposed to report. So the financial reporting system should adhere to that to those standards in order to meet the requirements. And also we have the auditors who will check that and so on. But in this side, in the management reporting systems, is discretionary, sorry, and it is based on the need and demand of the company. Although there is it has been mentioned in the Sarbanes-Oxley that it should have what we call effective MRS reporting, management reporting system. So management reporting systems usually seen as discretionary reporting, but can argue that Sarbanes-Oxley requires effective MRS. Critical element of organizations is the internal control structure, because it's based on the internal users, and so we need to ensure that the internal control structure is effective and strong. direct attention to the problem on a timely base, which promotes effective management and support the business objectives. So in order to ensure those information or managerial information is serving in the right time, it should come to the management to that in a timely base, which they can be useful to for the decision making for the decision maker. To have effective management reporting systems, we need to formalize the task. Means we need to have a hierarchy of the tasks within the organization in order to have effective management reporting system. So, formalizing of the task principles divides the organizational areas into tasks with clearly defined limits of responsibility. Means we know if anything happened, so we know where it come from, and also we know the responsibility and also the reaction to that issue. Okay, so the purpose is to avoid organizational structure that depends on specific individuals. So here in this picture, we show the formal process. If you see here, we have clear flow of the hierarchy of this organizational structure. We have CEO, then sales managers, and then we have specialists. And we have the connection only through those lines. Whereby in the informal we can see that it is mass somehow, that the connection is not formal. The organizational chart shows typical jobs position in the organization. So the organizational chart is playing an essential role in determining the responsibility and task location, and also it will shows the flow of information up and down. We'll explain that in a short while. Okay, allows the organizational chart allows formal specification of information needed to support tasks, regardless the individual performing those tasks. So it allows the position or the of the organization chart or the responsibility, not necessary the individuals by name. Responsibility and authority refer to the individual's obligation to achieve desired result and the right to make decision within the limit of the obligation. It defines the vertical reporting channels through which information flows. So here we can see the example of an organizational chart, and we can see that it shows that who's the manager of each department, and it shows also the followers or the employees in each organizational level. So in here, let's say we have this one is the senior managers, and senior managers, they have certain obligations and right to and authorizations. Then we have the we can call department managers, and we have the employees under each one of them. So also in terms of reporting and flow of information, the flow of the budgeting will be from up to down. So budgeting and commandment will come from top management and goes down, whereby the performance reports will come from down to up. And in each level, they require different type of information. We will explain that after a while.
Having said that, talking about the organizational structure, let's talk about the span of control. Span of control refers to the number of subordinates directly under the manager's control, which will affect and shape the reporting content and structure. The managers with narrow spans of control need details report whereby the managers with broad spans need summarized information. Okay, so I give example here, the management by exception. Management by exception suggests that the managers give more trust to the workers, and he or she limit their attention to the potential problems area only. So the reports should focus on the changes in key factors that are symptomatic of the potential problems and avoid unnecessary details. Here we have examples of the narrow spans control and as well as the broad spans control. Here we see the managers here with the narrow spans controls. They limit themselves to only the necessary information come from those two managers. So you can see that those managers also they limit themselves with the information, the necessary information come from those managers, and so on. So that is what we call the narrow span. But if we have broad spans control, like this example, so the manager here will require more details reports from all around those across all of the managers under him or under him.
It's important also to discuss the management functions and the level of the management and the decision type. Okay, so talking about the management functions type, we should understand first the strategic planning decisions. The strategic planning decisions includes the setting the firm's goals and determine the scope of business activities, as well as determining the organizational structure and the management philosophy. This is in the strategic planning level. The strategic planning decisions are long-term, require high summarized information, tend to be non-recurring type, meaning that it's not redundance, it's not happening in redundance norm or level. So also having a higher degree of uncertainty and require both internal and external sources of information. Strategic decisions are broad in scope and have profound impact in on all levels of the organization. So it will have major impact into the all levels of the organizations. That's the strategic decision. So we need to differentiate between the strategic and the technical decision, the technical decision of the management. Short-term planning involves the implementation of specific plans that are needed to achieve long range of objectives. Control functions ensures the firm's activities conform to the plan, either the short term or the long term. Now let's talk about the tactical planning decisions, which is a subordinate to the strategic decisions, which we talked about it in the previous slide. The tactical planning decisions is a shorter, it has shorter term, it's not long term compared to the strategic decisions. More specific, it's not general, it's not based on uncertainty, it's more specific, and it's reoccurring, having fairly certain outcomes, and it has lesser impact on the firms, not comparing to the strategic decisions, which has profound impact to the all levels of the company. Management control decision involve motivating all managers to use resources as proactively as possible. It is difficult to separate the manager's performance from that of the operational units. So the management control decisions is not easy to differentiate it from the operational control decision, which we will explain now. So the operational control decisions deal with the routine tasks, the daily task. Okay, it is structured decision. It is narrow focus in the uh, operations, depends on details, and it is short-term frame, meaning that it's based on the daily base. Okay, there are three basic elements for the operational control decisions. Number one is attainable standards. Second is performance evaluation with the differences from the standard noted as variances or differences. Lastly is taking corrective actions in the operational level. Here we have this table explaining the differences between the three classifications: the strategic planning and tactical planning, and as well as the control and operational control. And the comparison between those four types of decisions, it's based on the time frame, scope, level of details, and reoccurrence and certainty. So for strategic planning, it's long term. The scope is having high impact, profound impact to the all levels of the company. The level of details is highly summarized, and it's for reoccurrence is non-reoccurrence, and it is uncertain because it's based on planning for long term. Okay, whereby tactical planning is medium impact in terms of the scope. It's detailed, uh, periodic, reoccurring, and it's highly certain. Moving to control, management control level of decision, it's medium in terms of the time frame. It's not short. Lowest impact, moderating and summarizing, and it's periodically reoccurring. It's uncertain. Okay, so whereby for operational, which is the extreme side of the strategic, it is based on short-term time frame, lowest impact because it's impact only the functions or the operational specific operations. It has in terms of level of details, it's highly detailed because it's carrying the techniques or the tactical aspect on the operation. And in terms of the frequent, it's very frequent, reoccurring, and it is highly certain because it's having more details. Okay, now let's talk about the problem structure, which will be different from the management level. So here we have the problem structure is the reflects how the decision makers understand the problem, meaning that how the managers is understanding the problem. There are three elements explaining the understanding of the problem. Okay, so the first element is data, is the value used to represent the relevant factors of the problem. Also the procedures, the sequence of steps used in solving the problem. The third one is the objectives, results decision makers desired to attain. So if we have those three factors will understand, so we can call that the problem is structured. So when all three elements are known with certainty, it is called a structured problem. Okay, so there is no unique. It's not unique, meaning that it is a well-known problem. We already experienced the managers already experienced such a problem several times, so it's not unique. Well suited for the traditional data processing techniques. So we will just follow the traditional data processing technique. But if we have unstructured problem, it will with the problems unstructured problem exist when any characters from the three element is not known with certainty. So the normally complex and unique making traditional data processing techniques is ineffective. Okay, so let's have a better understanding by looking to this diagram or figure explaining the problem structure management level and the information system used based on this. So when we have the management level, we have strategic management in the top of the hierarchy, then we have tactical management followed, and then the sequence is operational management, then in the bottom of the paradigm is the operation. So the problem structure, if it is in the bottom of operation and so on, we can call it, we can see that the problem in this side in the bottom here is very structured problem, and it goes up to be unstructured problem. So the top management, meaning having say that, we can say that the strategic management is handling the unstructured complex problems, whereby the operational and tactical managers are more involved in the structure problem. Uh, Structured problem. Okay, uh, so let's say what is the style of information. So here we have traditional information system. Traditional information systems, we say that it is this style is repeating, having the procedures already processed the solution of the problem. So it will be more used in the structured problem in the bottom, operations and operational managers, whereby non-traditional information system, meaning that we use the creativity with unique and complex problems, so it will be used more with the strategic management level or the top management. After we discuss and explain the problem type or the structure of the problem, either is structured or unstructured, and we relate it to the level of the management, we can now build on that the structure of the management report, or the type of the management or the format of the management reports. So the management report may be in paper or digital form, and it express information either verbally or numerically or graphically. So it is not, this is what we call the information, the format or the display of the information in the management report is not standardized when we compare it with the financial reporting system. There are two general objectives should be entertained in order to have useful management reports. First, reducing the level of uncertainty associated with the problem facing the decision makers. Number two, influence the behavior of the decision makers in positive way, meaning that this report should influence or help the decision makers in their decision making process. The programmed reporting provides information to solve anticipated problems. We have two types uh, of programmed reporting, and one is scheduled reports are produced at specific intervals, maybe weekly report or end of the day, or maybe monthly reports, or on-demand report are triggered by events not in time. So either based on the events or based on the demand that required by the managers. So the management report attributes, it should be relevant, meaning that it's useful to decision making, summarization, appropriate level of details, exception orientation, identify the risks, accuracy, free from material errors, completeness, essential information is included, timeliness, in time for decision making. So it not come late or early, so it comes on the right time for decision making process. Consensus presented with coding schemes and calculations as appropriate to be understandable, meaning that it comes on understandable way of either numberings or visualization norm. So let's talk now about the flow of the information of the report. We have upward and downward flow of information. Okay, so the flow of the information from up to down, normally it is either the budget or the budgeting information, or some certain information to like the philosophy of the organization comes from the top management as a strategic information to the bottom, whereby the information come from bottom to from down to up. It is about reports about the performance. Say that the evaluation of performance, or the reporting the performance come from down to up. We should understand some techniques of evaluating the performance, so to understand the content of this information come, or the how to structure the report about the performance. So first, the responsibilities accounting, reporting result based upon managerial responsibility on the organization, flexible budget. So the budget formula based on upon the levels of activities. So like the example, the production levels, and the balance scorecard, which is one of the techniques to evaluate and measure the performance based on financial and non-financial information or measurement, and the graphs, data visualization, and proper graphs design. For the responsibility accounting, every economic event that affect the organizations is the responsibility of one of individual manager. So we can trace that event, economic event, to a specific manager. So that's what we mean by responsibility accounting. Since he had the responsibility and the right to decide, so if his decision carry any economic events, meaning that value that may either generate income or creating loss, so we can trace that responsibility to that manager. So the budget process helps achieving the objectives by establishing measurable financial goals for each organizational segment. The performance measurement and reporting take place at each operational segment. Information flows upward as responsibility reports. Okay, so the information comes from bottom to up, just to report how responsible those segments about their in terms of the budget. Is there any variance, or comparing with the budget and actual cost, or actual spending. Operational operations organized into responsibility centers. Okay, so we have cost centers, we have profit center, we have investment center. Cost center has responsibility for cost management within the budget. A profit center has responsibility for cost control and revenue. So the profit center will mainly will try to compare the cost and revenue, and normally profit center will be those like we can say that the sales department is considered profit center, whereby production lines or production department is considered a cost center. An investment center manager has general authority to make decisions that affect the organizations, including product development and other investment decisions. This figure is giving good example about top-down flow of the budget information. We have three levels of management here. We have the production manager, and we have the manager of the plant two. We have three plants in this ABC company, and we have the manager in the unit level of the production unit level. Okay, so for this level, we have the details of the budget. The total is 12,690,000, and for plant 2 we have allocation of 3,600,000, which will goes to as a budget will goes to the manager plan 2. In manager plan 2, you can see here in the plan 2 they have three types of production unit, plan 1 and 2 and 3, and for production unit 2 it has a specific manager which will have more details about the management production of the unit 1 or unit 2, sorry. For each unit, for sure, we will have the information about the materials, labors, and overhead costs. So that is the good example about the top-down flow budget information. So in the level of the top management, will not have the details about the, let's say, the production unit 2, and also it seems this goes to the manager plan 2, will not have details about materials, labors, overhead for the each unit of the production. But in the manager production unit level, then they need to have all of that details. Here we have the bottom-up flow of performance information. Now we have the from bottom to up flow. So we have here is also the same. We have manager production unit 2, and we have the manager plant 2, and we have the production manager. So you can see here, let's say, when they do the performance information evaluation of the performance, they will compare the budget, the budget with the actual and also the variance. So if you notice here, we have those details. Materials, they compare the budget with actual, and they calculate the variance, and labor and overhead. So it's very detailed. So when it goes to this report, performance report, will goes to the manager of plant 2. It will this information will form the same comparison, but in less details, in the level of totals. Here, these totals will goes to the manager's plan 2, which is higher level. And same thing with those totals will goes to form the plan 2 managers, to show the production, the manager or the production managers, the overall budget actual variance calculation of the information. And those information, for sure, it will be communicated to the upper level, either in terms of figures or in terms of graphics and or tables. Okay, so this is example of cost center performance report, and you can see here we have very details. This is in, let's say, in plant unit 2. We have here very details information about materials, direct labors, and controllable overhead. So we see here we have the budget and the actual cost, then we compare it, we calculate the variance. Okay, here we have the profit center performance. For the profit center performance, you will see here now we have something called the profit center, performance. In the previous budgeting, which is normally focusing in as a cost center, it show us details about the budget and the actual cost, whereby here we need to compare with the measurement with the measures of the profit center performance. So we should have those kind of details, the sales, the revenue, and we compare it with the cost. Okay, so also it goes to the investment, to the divisions income statement. It measure also the investment. Same thing will goes also about the information here for divisional overhead and so on. Here we also have multi-period investments center report. It shows a comparison between the actual cost of the previous 3 years of 2012, 13, and 14, and compare it with the budget of 2015. What is interesting here, since we explain the format or the financial reporting system that is it's well standardized in terms of the format and the content, but here you can see we have more than year to more than 3 years actual and compare with the budget, and also it give using the return on investment for as a percentage and figure. So also the report can not necessary to look like this, can be only based on the percentage, and also can be placed and displayed based on the graphics. Now let's talk about behavioral considerations for the management reporting system. First, a proper applied principles of authority, responsibility, and task formalization promote a goal of congruence or similarity. So carefully structured management reporting systems plays important role in promoting goal of similarity, while a bad design of management reporting system can cause action in opposition to the organizational objectives. Information overload is another behavioral consideration. We need to give the managers the information needed only, not unnecessary information. The information overload occurred when the managers receive more information than what they need or what they can assimilate. It seems like you are eating more than what you can assimilate and digest in your stomach, so it will cause negative effects. So inappropriate performance measures can lead to behavior that is inconsistent with the organization's objectives. Performance measures should consider all relevant aspects of the manager's responsibility, both financial and non-financial information. Now, let's talk about a new topic which is related to the management reporting systems. It's about data analytics and ad hoc reporting. We'll explain this, but it will talk about the data analytics as a new aspect of management reporting system. Now let's understand first what is ad hoc. Ad hoc is a Latin word meaning that it means for this purpose only, meaning that for specific use only. So the ad hoc reporting is the report created for one-time use, and I give an example here for specific information about that serve the specific decisions to be made. Data analytics, in other hand, is the process of examining data sets to draw a conclusion about the information this data set contain. Data analytics techniques enables to discover a patterns to extract valuable insights and indicators from the raw data. Let's talk first about the small data analytics. First, we should understand what is small data analytics. So the small data analytics is the techniques that employ to the data that are in a format and of a volume that allow the techniques to be analyzed and acting upon the traditional technologies. Typically, direct solve specific problems. So this data is typically related to a specific problem or issue. Central features is data warehouse of archive data, meaning that it's about the historical data that's archived with the warehouse data of the organization. Contain a copy of operational data about the current transactions and the event happened many years. This data support management reporting knowing as data mining. So we need to understand what is data mining. Data mining is the process of selecting, exploring, and modeling data to uncover relationships and global patterns. Data mining techniques: first, verification model, drill down techniques to either verify or reject the hypothesis, or discovery model, using data mining to discover previously unknown about the important, or searching for a patterns, trends, and or a generalization. So either to be for verification purposes or for discovering a new things for a new trends or patterns or generalization. We discussed just now about the small data in details, and also we have some hints about the big data. So it's good to illustrate more about the differences between big data and small data. And I like this picture, and it's visualize the difference between small data and big data. Small data is like a leaf or part of the tree, big tree, including many leaves. So the big data is telling us what is happening in general, whereby small data tell us why it's happening about the specific leaves only. So this is just to visualize and explain the difference in easy. So the small data is easy to be attainable, and it is normal database uh, within the organization, let's say, whereby big data is difficult to obtain and it is massive database. Small data is helping us to understand the attitudes and the emotion behind the behavior. Um, uh, for example, using the survey to understand the behavior, using the interview focus groups to understand the behavior of the customers or anything, or employee or the mobile diaries. Okay, whereby big data help us to understand the human action and behavior in general, using the web analytics, the click streams, and the social interaction. And this is a kind of examples just to explain the differences using general examples. Let's say in the small data, using the survey to deploy survey to review a message effectiveness before launching the product, as an example, whereby big data is using the click stream data to determine the online advertisement response. Okay, so that is in a simple way. Now let's compare the small and big data in a technical details. For the small data, is a low volume. It's not into petabyte volumes. It's not huge or massive data, and small data is based on batch velocity, whereby the big data is based on real time velocity, and the small data is structured varieties approach, yeah, and whereby the big data is multi-structure varieties. Let's explain these three main data differences between characters between the big data and small data. For the volume, um, involves terabytes, petabytes, exabytes of data, meaning that it comes from big sources, come from sources such as customer sales records, voice and text, log files, speech to text data. So various resources of data collected as a big data. So it creates a huge petabytes or even exabyte in some occasions. Velocity, the speed at which big data must be analyzed. So the big data analytics, it requires velocity. Okay. Variety, uh, the primary drive of volume derived from the audio, video, real-time streaming data, external social media supplied by Internet of Things. This is Internet of Things, by the way, is one of the the revolution digital sector or industry. So it's kind of a new technology that connect. Internet of Things means everything is connected to the internet, and so based on that we can use the information recognized or captured by those things, like the sensors, camera, CCTVs, and so on. All of this information captured uh, by those sensors or things connected and used as a source of data. Now let's have a look to the big data reporting system. The patterns and relations derived from the unstructured big data can deliver high quality business intelligence that provide big sight of business. So we have four types of analytics on the big data: descriptive analytics, diagnostic analytics, and we have predictive analytics and prescriptive analytics. So we can compare between the four based on the complexity and adding value or the contribution of this type of analytics approach. So for the sorry, for the descriptive analytics, it's less complex and simple, but it's less it is very simple to run the descriptive analytics compared to the other approach of analytics, whereby the highest is the prescriptive analytics, which is more complex, but it is giving high value added and high contribution to the reporting of big data. So let's look into each one of these analytics approaches. So there are four sources of business intelligence. Number one, as we said, descriptive analytics. It's a mathematical process that describe real world event and the relationship between factors responsible for them. Learn about historic activities and events to understand how it affect future outcomes. For the diagnostic analytics, the techniques view the past performance to determine why something happened the way it did. So it's more insight and complex compared to the descriptive analytics. It shows the diagnostic analytics show how team performing and differentiating symptom and problem. The third one is the predictive analytics. It's a variety of statistical techniques that draw upon current and past data to calculate the future scenarios occurring. So we predict the future scenarios based on the current and the past data. So and it is more complex and adding more value compared to the diagnostic analytics and descriptive analytics. The highest in terms of complexity and adding value is the prescriptive analytics. It tells the user what action should be taken in response to the specific actions and support product as assortment optimization to maximize the value of the company. Okay, since we are using the small data and big data for the management reporting system, we should highlight the risk and also the security of the data. A central component in controlling and securing from the external hackers is the implementation of an electronic firewall. These firewalls will play the role to isolate the organization's internal network and store data from the outside intruder and hackers coming from the internet, connecting from the internet. The firewall allows only authorized traffic passes between the organizations and individual outside. When they fail, when this firewall fail to validate the test, the internal security group should investigate them. I mean the individuals who try to hack. Under the data security, also the access privileges. Organizations should implement formal procedures for assessing the access privileges. Periodically review the existing employee privileges. The best password control reset heavily on common sense procedures to be enforced. For example, strong password and periodically changing procedures for the password. Some organizations use one-time password system where new password randomly generated after 60 seconds and can be used once in system audit trials as one of the techniques to control or to secure the data is the log file or the log techniques that we explain in the under the IT application controls for the processing stage. So log that records activities at the system, applications, and users level. It monitors users' activity at lower level details, but also can be set to perform at higher level of monitoring that record the IDs of all users accessing time and duration session, program that were executed, and the file database printer and other resources accessed. In case organizations hand over data to third-party service provider who then perform the analysis. However, it is risky to employees within the service provider. So the risk is not the risk is not within the organization itself, but it is with the service provider, the third party. It is also risky to failure to perform to performance of services where provider not deliver all or provide unreliable result that client needs. To mitigate this risk, external auditors of the service provider, the third party, may issue a statement on standards for the attestation engagement, number 16, report. This report, the auditor report about the internal control of their client. Okay, so the auditor can determine whether the control at the third party services the auditor can determine whether the control at the third party services provider are free from material weaknesses and risk. We come to the end. Thank you for your listening. I believe this is this is the longest lecture. It's around 2 hours, but believe me, this is a quite intensive explanation about the main idea here. This chapter is abundant because it include several aspects. We need to keep link the financial report, general ledger and financial reporting systems and managerial reporting systems to the previous chapters or the previous TBS or transaction processing systems cycles. We bring them all in the discussions. We try to facilitate and visualize the idea of the relation between the TBS and the reporting systems. We also talk about the new or the advanced systems in the market related to the financial reporting system. We talk about XBRL. It is about, as we say, that it's the language, business language of extensible or flexible language to transfer or share the financial information. We also discussed the in the management reporting system. We discussed the big data and Internet of Things, which is the two big data and the Internet of Things is features of the digital industry, which is affecting the company in general. Okay, so I believe I will see you next week, and we will have more discussion and Q&A session, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.